Good evening, Miss Balls and Shueni and Larry Governor and Mr. Lee Leon. Good evening, everybody. Hope you are doing well. There we go. And who else is joining us tonight? I'm sure we're going to have a number of people. There's normally a bunch of people here on a Wednesday evening. So if you've got any questions, you better start asking so that you get in first with your questions before the rest of the people joins us. And while you are deciding on what you're going to ask me, I am just checking something here on the sideline. Let's see. How's it, Hawk? Good evening, Jabu. Jamor, how's it? I've already been warned by a couple of people that they're going to ask me lots of questions tonight, so let's go for it. Okay, that's what the answers that I needed here. I think I'm from... Hier kom jy maar na juist. Lovely. Let's see. Jaymor, good evening, and Wuzidon, and how's it, everybody? Hello, Lebogang. Good evening, Jaymor. Hallo, Tony Bets. Hoe gaan het vanavond? Mooi. Jaymor, you like me a lot, it seems like. Thank you, Jaymor. Oh, seems like the cold is keeping everybody away tonight. Any guys, whenever you've got a question, I'll start answering. You know how it works? I'm sure you know by now. There we go. Charlene. Good evening, Charlene. I sent you an email just earlier today. I trust you will receive it. What is the difference between mutual funds, unit trust, and index funds? Oh, now you're getting very difficult, Charlene. Gee, man. So... Okay, these things kind of overlap, Charlene. So first of all, unit trust, let's start with that one because that's the easiest one of the three. So unit trust is when you choose a specific unit trust. Let's say Golden Mining. Then that portfolio manager that has to do that portfolio for you, that runs that portfolio for you, can only buy shares in mining and gold companies. So anything that's got to do with mining and gold companies, those are the companies that he can buy shares in. He puts all those shares together and that becomes unit trust. So you get different types of unit trust. You get general unit trust where you can basically buy any shares you want, and then you got very specific unit trust like the gold and mining I just explained. Then the next thing, index funds. So index fund is where you know, JSE, Johannesburg Stock Exchange. So the Johannesburg Stock Exchange has got what we call the top 40. So the top 40 is the top 40 shares, the top 40 companies in the JSE. Just like the S&P 500. The S&P 500 has got a similar matrix. So what happens with an index fund is that they say, okay, these are the top 40 companies. And when we invest your money in this, we only invest in those top 40 companies. If we are talking about something like the JSE top 40, for example, we only invest in those top 40 funds. We will not invest in any company that is outside of the top 40. So if a company falls outside of the top 40, they will go and sell those shares. They will buy new shares in the top 40s. A lot of these ETFs that they call the tracking funds, a lot of them is index funds because they just track whatever happens in that specific index. Mutual funds, and I hope I've got this one right, mutual funds is where you've got a collective bunch of investments. So that's basically like your portfolios and everything, where everybody invests in these funds. So those are the three differences. Like I said, they do overlap, and sometimes, I must be honest with you, sometimes the differences between these three different funds is so small that you can almost not even distinguish between them. Okay, Charlene, I hope that answers the question for you. What was that? Jaymore, ja, jong, tap and share. Thank you, Jaymore. Appreciate it. Good evening, Jesus Girl. I see that I spoke to you the other day as well. Welcome to my live tonight. Good evening, Ginger Tea. And let's see who else. Which ETF do you recommend? Ginger Tea, as a matter of fact, I don't like ETFs because ETFs is like the tracking funds that we just discussed. So let's just look at an ETF a bit closer. Let's say you go for the top 40, the JSE top 40 ETF, okay? So what happens is they will say, okay, Pick n Pay is at the moment #1 on the top 40 in the JSE, the best possible company, and it makes up 1.5% of the JSE. And the next company is Sasol, and they make 1.4% of the JSE. And next is Naspers, they make 1.3% of the JSE. And those ETFs go and they split the money in the fund exactly based on those percentages. So once you put in your $100, they go and put 1.5% in Pick n Pay, 1.4% in Sasol, 1.3% in Naspers, and they fill up the $100. And then tomorrow morning, when the JSE opens again, then they go and they look at how everything is rearranged themselves, and then they rearrange your portfolio. And that's an ETF. So it just tracks whatever happens there. And I'm not a big fan of that. So I normally go for funds that are actively managed. I believe that that portfolio managers that actively look at the market, that do their due diligence, they have a better idea of what could be good, what could not be good. They could look at something and say, okay, this specific company is just an upstart, but because it is in a specific sector and we expect the sector to grow, this might just be a good company, so let's go and buy into that specific company. And very often it happens that they pick good ones and then they get substantial growth on those shares. So Ginger Tea, I hope that explains it. Some of these things, I'm impressed, folks, I must say. These questions are becoming much more technical. I'm going to have to get some investment specialists to sit next to me one of these days to answer your questions. Naam, Corneille, hello, Philip. Hoekom betaal jy so baie belasting as jy bedank en na baie jare by jou maatskappy? Okay, so Philip, I'm just going to translate this into English so that everybody can understand. Why do you pay so much tax when you resign and after being so many years with your company? So Philip, the straightforward, easy answer, and I know that SARS will most probably crucify me for saying this, but it's because they want to discourage you from withdrawing your funds. Because if you retire out of your fund after the age of 55 anytime, then you get that 550,000 tax-free, 220,000 at 18%, etc., etc. But if you do it at any stage that you resign and you withdraw the money, then you only get 27,500 tax-free, and on the rest you get taxed. And the intention with this is that they want to discourage you from taking all your money. Because it's been proven that when people take all their money, they end up 9 out of 10 times in financial poverty and problems a few years down the line. Because they don't know how to work with such a big amount of money. But if they retire, then at least we know that they're going to have an income for the rest of their lives, depending on the type of product that they're in. So that's the short, simple answer. You are discouraged to withdraw the money. And if you actually go into retirement and you then take the money, whether you take 1/3, you pay tax, and the other 2/3 you get an income from, the tax is not that big. As a matter of fact, you could go and just about do any calculation that you want. The person going into retirement is 99 out of 100 times going to pay less tax than what they were before retirement. At the worst, depending on how big your funds are, you're going to pay the same amount of tax. But you're still going to score because of the tax-free portions that you get. Oh, Philip, sorry. Now, someone see, you had a second question. I basically answered both of them at the same time. So I hope you're happy with that one. Okay. Thanks, Philip. Thanks for that question, mate. Mandula, what's the best... Wait, hang on a second. What's the best broker platform for investing? Mandula, I don't think I quite understand what you mean with the best broker platform. And the reason why I'm saying that is, in our financial industry world, where I am a financial advisor, you get independent financial advisors, you get bank brokers, you get tied agents, you get direct employed agents, you get telephone consultants. So there's a whole lot of different people that you get. At the end of the day, all these brokers are legislated by law and can all just ask a specific commission. So there's not a better or a worse advisor from a commission point of view that the one will ask more than the other. I think your best broker, should you rather ask, your best broker is the person that you trust, that when you speak to them, that you feel you can trust, that they are not just trying to sell you a product, but that they're actually giving you proper advice and they're guiding you towards the most appropriate products for you. So I very often say, when people say, okay, so how do I know that, how do I pick a broker? Where do I find the best broker? Number one, I'll say go and ask for referrals. There must be people in your life that has financial well-being, etc., that are doing well financially, and they will have financial advisors or brokers that they deal with. And especially if they've come a long way with them, it must mean that they trust these people. So go and speak to somebody, get referrals. That's number one. Number two, get a second and a third opinion. Don't just go with the first guy that you work with. If you don't feel confident, go and try a second and third person. And number three, you can actually contact some of the insurance companies at the franchises, at the brokerages, at the tied agencies, and you can ask them to refer you to somebody that they believe is good. So I hope I've answered that one for you, Mandula. Connor, what's your favorite investment right now? Connor, very difficult to answer, mate. And the reason why I say it's very difficult to answer is because you've got retirement annuities, unit trusts, endowments, tax-free plans, and that's just the investments that you use to get to retirement. Then when you go into retirement, then you've got all the different income plans. So my favorite investment is the one that is best suited for the client. If a client's tax rate is 30% or less, then normally a unit trust is going to be ideal for them. If it's 30% or more, then an endowment is going to be better for them. If the client does not have any pension fund or they don't make use of the rebates they get from retirement annuities, then it might not be the unit trust, or the endowment might be the retirement annuity. If somebody has not been contributing towards a tax-free plan and then a high tax bracket, then that might be a good one for them. So it's very much dependent. Favorite investment is very much dependent on what the client's needs are. So I cannot tell you that I've got one specific investment and that's my favorite, because it differs from person to person. And honestly, I don't think if you go and look at my investment book that I have for my clients, that I've got an overall majority in one or the other. Retirement annuities, most probably the one that I've got the most in, but it's because of the tax benefits that's involved with it, the rebates that one get, and the fact that one can have such substantial growth if you actually reinvest your rebates when you get it. So Connor, I don't know if that answers the question, but I hope so. Jock, let me go back there. Hi, is daar 'n aftreeannuïteit waarin mens geld kan inbetaal wanneer jy kan en hoeveel jy kan? Okay, Jock, so the question is there a retirement annuity where a person can invest money as much as they want when they want? Yes, Jock, as a matter of fact, you can do that with just about any investment house. Old Mutual, Sanlam, Liberty, Discovery, Allan Gray, Coronation, Marriott, you can keep on naming them. Basically, all the companies have what we call flexible and focused investment. So focused investment is where you say, I am committing myself to investing, let's say 1,000 Rand per month. And you put a debit order in place and 1,000 Rand per month goes off. Flexible investments is where you decide, okay, this month I've got 10,000 Rand and I'm putting it in, and then nothing for 3 months, and then you've got 30,000 Rand, you put it in, and then nothing again for 2 months, etc., etc. So yes, you can with all the companies. They all have that product available. Small warning of note for everybody. Do commit yourself to a few rands on a monthly basis, even if it's just 500 Rand or 1,000 Rand. When you do an investment, do that. And the reason why I'm saying this is because I speak to lots of people that come to me with the greatest intention of doing exactly this. I'm going to put in money as and when I get it. And yes, that's what I'm going to do. And you know what? I don't see them for the next 12 months. And when I go and speak to them again for their annual review and I say, why haven't you invested money? Oh, yeah, this came up. We always find excuses not to go and invest the money unless you are really financially very disciplined. Philip, how does the tax work if you get fired and what portion do you get? So Philip, it doesn't matter. When you get fired, it's exactly the same story. If you are, when you get fired, they give you the option to either move your money to a preservation fund, retire if you're old enough, or withdraw the money as in you just want to take everything. So the tax is going to work exactly the same as what it would work on normal retirement or normal withdrawal. You're not going to pay any less or any more. It's going to work exactly the same. I must say, I'm always wondering and confused why so many people ask me about options if getting fired. It seems like a lot of people are very concerned about the job market in South Africa, which is an absolutely very confusing because the labor laws in South Africa protects people so much. Any case, I hope that answered Philip. Paresh, Classic Central Radio. Moving life cover from one institution to another, is that advisable? So Paresh, yes and no. And I know this is this is maybe not a good answer, but yes and no. The no answer is it depends on what the cost is going to be, what the benefits are going to be, how it compares. Is it apples with apples? What the premium update facility going to be. I've seen on a lot of occasions people move their life cover from one company to another because the new company is giving me 20% discount on my premium. And then when we go and compare the old product with the new product, then we come to the realization that the old product had a level premium, meaning the premium never went up, and the new product has a compulsory 5 or 10% increase. So that person gets his 20% discount now, but he's going to suffer somewhere in the future because it's going to go past the old premium. So that's no. It's not good to do that because you can get bitten. Yes, in the sense that just like with cars that keeps on enhancing, the 2010 Toyota Corolla that you bought then and the 2025 Corolla that you buy today, if you have to go and compare these two, there's so many more features to the new Corolla, maybe a better engine, a stronger engine, etc. So with life cover, it works exactly the same. The companies on a consistent basis improves the benefits and everybody tries to outdo everybody else. So you do find that sometimes moving from one life policy to another life policy, you are actually going to enjoy better cover. And we are talking better cover mainly here on disability and severe illness benefits. Because life cover is life cover. If you die, they have to pay out. That's as easy as that. But it's on the disability and the severe illness cover. And statistically, just for interest sake, statistically it's been proven that most people keep their life policies for about 7 years and then they replace it with something new. So I think, Paresh, at the end of the day, going back to the previous question we had now about brokers, you want an honest broker that is trustworthy, that is, when they give you advice, and if they do replace a life policy for you, it is because they are doing it for the right reasons. And they're not just doing it because they're going to get some commission out of you. I hope that answers it. Okay, Tabang. Oh, Tabang says, if you have 20 million, would a fixed account be right if you want a monthly income? Monthly expenses 65K. Tabang, if you are talking about a fixed account, you're most probably talking about a fixed investment with a bank. So basically a savings account from which you're going to get interest. And then unequivocally, no, it is not the best place. A fixed account for 20 million is not. You are going to pay taxes through your ears, right? Over and above the fact that you're going to pay taxes through your ears, you're going to get a set percentage. They're going to promise you, we're giving you 10.5%, greatest things in sliced bread. After your taxes, you're going to end up with 7.5 or 8%. So no, definitely, I will not put 20 million rand into a fixed account at the bank. But the nice thing about 20 million rand is that you can actually do a combination of investments. And the one thing I love to do is to split up big amounts like this and take a portion that's going to buy a person an income of, like you say, 65K for a guaranteed period of 5 years. Because it's voluntary money, a big amount of that, 80 to 90% of that income that you will generate will be completely tax-free because it's your money that you are drawing. And then we take the rest of the capital and we go and invest it somewhere where we try and get the 10, 11, 12% return on investment. After 5 years, the income plan comes to an end, it's over and done with, and then the growth plan has now grown back to your 20 million or more. And now the magic thing is, you can still stay in those growth portfolios, you can start drawing an income, but because it's 5 years later, it becomes an after-tax income. So now you don't pay tax on your income anymore. So that's what I would do if I were you. And this is if it's voluntary money, eh? Because remember, rules change as soon as it becomes pension fund money, so therefore compulsory money. Hope it answers it, Tabang, and I hope you do have that 20 million because I'm looking forward to investing it for you. Let's see where we are next. Sorry, folks, I have to scroll back. We've had quite a number of people coming in and joining us. I just want to get, there's Tabang's question. Devishan, I have 700K. What will be the best investment to receive a monthly income? Devishan, I cannot tell you, mate. I keep on telling this to people. If I try and make a recommendation just based on this question, I will be doing you a complete disservice. Because I don't know what your needs is. I don't know how long you need the income for. I don't know what risk you can take. I don't know what your tax implications are. I don't know how liquid the money must be. I don't know what your family circumstances are. Whether you should leave a legacy. Whether you need a guarantee. Whether you can take a risk, etc., etc. So the only way for anybody to make a proper recommendation is to have a consultation with you, get a lot of information, do a planning session, and then advise you accordingly. Okay, Devishan, find somebody that you can trust, mate. Do you do life covers? If so, which life covers has best benefits for 1 million rand cover? On life cover, it's straightforward and simple, according to me. Like I said, life cover pays out when you pass away. It doesn't matter. If the underwriting has been done today and your policy starts tomorrow and you die the day after that, if the underwriting's been done, they pay out. It doesn't matter if it was an accident, doesn't matter if it was a sickness, nothing, they pay out. So on life cover, it is pretty much straightforward in the sense that the most affordable one is the one that you go with. Okay. But 99 out of 100 times, okay, maybe not that much. 90 out of 100 times, people need additional benefits such as disability or severe illness. And then, unfortunately, it depends from person to person. The person that is a big Discovery supporter will show you all the reasons why they believe Discovery is the best. The person that believes in Liberty will show you why Liberty is the best. The person that is with Sanlam is going to show you. Then it really becomes like car salesman in the sense of it depends on which garage you walk into, what car you're going to be sold. So there you go. I hope that answers that one for you. Let's see who's next year. Ilyas, you say I'm a financial advisor and you need some tips. So Ilyas, I offer this on a regular basis to other financial advisors. In my profile, you've got my WhatsApp number. Send me a WhatsApp. We meet up for a coffee. I'll chat to you and we'll see how I can give you some guidance and advice. I'll do it with the greatest of pleasure, I promise. Let's see who's next. Don't be not nasty here, Philip. Shit. Well noted, thank you. It's a pleasure, Paresh. Anytime, mate, anytime. Some financial advisors state that they are not allowed to give tax advice. Is this true? So, Charlene, yeah, I suppose it's true. If a financial advisor does not have an understanding of tax, then yes, I would say that they can't give advice. I mean, myself, I'm not a tax specialist. I don't do personal tax. I don't do company tax. I've got an accountant that does that for me. He must sort out my tax affairs with SARS. I don't do it myself. What I do understand is the tax implications of different investments for people. I understand the tax implications of the income plans that they take, etc., etc. And that an advisor should know. They should understand the tax implications on incomes, on funds, on portfolios, on capital growth plans, etc., etc. So if an advisor says to you that they're not allowed to give you advice on that, most probably means that they don't actually understand those taxes. And then maybe you should just look for somebody else, somebody that's got a better understanding of the tax implications. Elias, you and Philip must not now get upset with each other. Paresh, thank you. Currently, both advisors are waging each other on who's better. I should have not done this. Paresh, you know what is the easy answer for this? I'm actually glad you made this comment. I believe that if a financial advisor has the courage of his convictions, okay, that he should be willing to sit across the table with you and the other financial advisor. And two financial advisors should be able to sit around the table, give their arguments and counter arguments in a conversation in order for you to make the final decision. And over the years, I've had a number of occasions where I've had similar incidents, and I've said to the client, please do invite the other advisor, let us sit around the table, let's discuss it. And you know how many times it happened? Absolutely 0 times. Because people have this tendency to get aggressive because you're not believing me. It's not a question of I'm not believing you. I'm trying to figure out what's the best for me. And if you're sitting in a situation where you've got two advisors that's out competing and you say you should not have done this, well, pretty easy. Get yourself a third opinion. It's as easy as that. Let's see. There we go. Apewe, I see you say, yeah, hi sir, I need your advice. Apewe, well, then you must contact me. Once again, in my profile is my WhatsApp number. Send me a WhatsApp. We can set up an appointment. You can either set up an appointment with me or with one of the 11 advisors I've got in my company. They're all under my wing. I'm the man that makes sure that they do the right thing in the right way. So you're welcome to contact us and we will give you advice. Oh, Paresh, you say that's my situation, Discovery and Liberty. Oh, Paresh, I'm sorry to say, but yeah, that is a bit of a conundrum. Well, Paresh, I'm going to give you the same offer as the previous guy. Contact me on the WhatsApp number. Send me the quote. Send me your existing policy. Send me the quote of the new one. And I will give you an opinion. I won't even make an opinion with regards to a third option. I won't even recommend a different company. I'll just give you an opinion as to which one I think is the best. Okay. Apiwe says, so I was wondering if investing in T-bills and or bonds is a good thing for me. So what the heck is T-bills? Sorry, I just want to see if I can find something here that tells me quickly. What is T-bills? Oh, treasury bills. Treasury bills. Or bonds. Is it a good thing for me? People, I can't tell you. It's like I said to the previous gentleman, there's so many factors that needs to be taken into consideration with a client before you can give them advice as to what will be the best investment for them. I cannot in good faith tell you, yes, do this or do that. Personally, I don't like either. I don't like treasury bills and I don't like bonds. And the reason why I don't like it is because it's interest at the end of the day, and because it's interest, you pay tax once again. Now, I don't know how old you are, but if you are anything under the age of 45, 50, you should not be really investing in something that's so conservative. You should be looking at something that is going to give you a better than average return, a better return than what T-bills and bonds are going to give you, and which is not going to be taxed, or which is going to be after tax growth. So, yeah, mate, once again, speak to somebody, get some advice. Get opinions, go and research the different options. But personally, I don't like either. Okay. Hey, Henry. See, Henry is live at the moment. Correct. Any update on the tax increase and how will it influence investments? So, Philip, the only tax increase at the moment is the 0.5% VAT increase. And all it's going to mean is that your short-term insurance, the premium is most probably going to go up by 0.5% because of the extra VAT. Your life cover policies will remain the same; they will absorb it in the this. Your unit trust and your CGT is not going to be affected. Your investments is not really going to be affected because that's capital gains tax and interest tax and dividends tax. So yeah, I think the only thing that's really going to be affected is going to be short-term insurance. There might be other investments that might be affected by that, but not many that I can think of, or not any that I can think of at this stage. So I don't think it's something that we have to worry about too much. Whoopsie, there goes that again. Msa Z, I just spoke to, what's his name here? I just spoke to other gentlemen to say that I don't like government bonds. I don't like government bonds. Government bonds are used in certain portfolios, but it's used in portfolios that are very conservative. And my honest opinion is the only time that one should be invested in conservative portfolios is if you do not have enough capital, or if you are very old and you're drawing an income from it and you don't have to provide for a very long time. But if you are investing for the future, I think government bonds is most probably one of the worst places to be invested in. So I would not give any advice on buying government bonds. The only thing I can tell you is you can go and do it yourself. There's many platforms that you can go and do it yourself. Personally, I'm not interested in that, or I'm not a fan of that. I'm not what do they call it? I'm not positive about it. Kanyele, and ultimately give some sound advice. Okay, thank you for the statement. I think I'm going to do that. Great advice. Let's see what outcome. It's my funds. I have the right. Absolutely, Paresh. I agree with you 100%, and that's what I keep on telling people. It's your hard-earned money. I, as a financial advisor, want to make money. Of course, I want to be successful. I want to live a comfortable life. I want to earn a good income. But if I want to earn that, then I must produce the goods. I must give you good advice. I must give you honest advice. I must do what the legislation says on the FSCA. Honesty and integrity. And if I don't do that, then I should not be an advisor. And unfortunately, there's a lot of advisors in our industry. I'm the first one to say so. And I know a lot of them will be upset, but so be it. There's a lot of advisors in our industry that's just giving advice and writing for commission. But yeah, it's your money. It's hard-earned money. And that advisor should respect that fact that it's hard-earned money. And because it's hard-earned money, that advisor should give you good advice. They should really put effort in and make sure that they give you honest, good advice with a good plan that is formulated for you before you spend your money with them and before they earn the commission. So yeah, Paresh, I agree with you. Pleasure, Paresh. Charlene, are you affiliated with Old Mutual? Yes, Charlene, I am indeed. As a matter of fact, I've got two companies. The one is an independent brokerage where we've got contracts with just about every insurer and investment house that's out there. And the other one is an Old Mutual franchise. So I do have both. I am affiliated with Old Mutual. And honestly, I think I love their products. I have never had any comebacks on investments with them. I've never had an investment that performed worse than what they expected it to perform. I've never had a problem with any claims. So yes, I am affiliated, and I'm pretty proud to be affiliated to them. It's a good company, a very good company. Let's see. Noted, sir. I'll be contact you 100% up airway. You do that. Oopsie, there we go again. Oh, okay, Mazed, great. Sorry, you know what happened, Mazed? Your question came in while I was busy answering the one, and then I have to go scroll back, and then I see this. Okay, maybe I should take what to call. Thoughts on tenders and mining. Now, private life of PLK, how do you want me to give any thoughts on tenders and mining? That's not something that I do. So I can't really give thoughts on that. Mining, I think, is something. The one thing I can tell you is I think mining is something that's going to be here until the day I die, and most probably after that, because precious metals is something that's always needed, not only to make nice diamond rings and gold bracelets, but it is used in a variety of products. So there's always going to be a need for mining. In terms of tenders, it depends on what type of tenders we're talking about, because there's plenty different tenders out there. And I can't really give an opinion on tenders because I don't deal with tenders. I don't have to deal with tenders. Suleiman says, you know Bobby Petkoff from Midnight Motor. I don't know Bobby personally, but I've seen Bobby's videos. I know a few people that has spoken to Bobby. Fun guy, good guy, seems to know his product and everything, top of the pops. So yeah, I don't know him, Suleiman, but I definitely have seen some of his videos. I love the guy, and yeah, maybe one day I'll get a bit silly and do videos like that, but not today. I don't trust Bobby. Saw a video with many unhappy customers. He thinks he's the best. Philip, I don't know. All I know is I find Bobby very funny sometimes. He does stuff. He gets attention. He knows how to market himself. So that's the one thing that is important for anybody that's listening here. You want to start a business? Take one bit of good advice. Get clients before anything else. I very often speak to clients and they want to start a business and they want to know, but what do I do about a warehouse, and where do I get the stock, and how much must I fill up with? No. You don't want to go and spend money to start a business. You first want to have the problem of getting clients. And then once you get the clients, then you figure out how you provide them with the product that you want to provide them with. So get the clients first. And this is what Bobby is good with. Love him, hate him. He's good in doing that. Let's see who's next. Whoops, see, there we go again. Ranesh, I hear you on RSA retail bonds, but I look 5-year bond on 11.75% interest matures in 2028. Ranesh, I hear exactly what you're saying. 11.75% sounds absolutely great and fantastic and everything. But if you invest and you get the 11.75% and after tax, you end up with 9 or 9.25%, even 9.5%. Is it still such a great investment? According to me, no. So and once again, Runesh, it depends on how long you've got to invest for. If you are an older person and this is basically your only money for income and you need it for a shorter period of time, then yes, absolutely. I think then it's great, then it's fantastic. But if you are not, if you are younger and you're busy building up capital towards retirement, or you need an income but you've got time to go, then I will not invest my money in a retail bond. Even if they promise me 13% return on investment. Because I know that after the taxes has been taken off, I'm getting 2.5%, maybe 3% less, depending on my personal tax rate. So, yes, and listen, this is the thing, folks. Ranesh, please listen. This is what I keep on saying to people. Because there's a lot of people that take me out on social media because I do not like property, because I don't believe in property, and because I tell people I will not invest people's money in property. But there's lots of people that does brilliantly with property, that's built a big property portfolios, making lots of money, very successful. There is place and space for every person and for every type of investment out there. The thing is that every individual must find the investment that is going to work for them and what is going to make them feel comfortable. Now, as a financial advisor, I talk to you about investments that I do and that I feel comfortable with, where I invest my money. And I tell you about the investments that I do not put my money in and why I don't put my money in there. And that's why I'm saying to you, I'm not saying retail bonds is bad. I'm just not a fan of it, and I don't think that it gives as big good value as other investments can give you. Okay, thanks again, Ranesh, for that question. Dory says, your thoughts on momentum. Dory, there's nothing wrong with momentum. You know what? Honest opinion, all the big companies, okay? And it might sound like I'm just punting the big companies, but Old Mutual, Sanlam, Liberty, Discovery, Momentum, Marriott, Allen Gray, Investec, 91, and you can carry on with them. The bigger, well-known companies is normally good. And they're as big as they are because they are good. They've got good products, they've got good fund structures, etc., etc. What worries me more, or the companies that I'm not comfortable with, okay? And maybe I'm going to be shot down, but direct companies. I do not like direct companies because they don't give advice. They just try and sell you something. I don't like smaller banks or smaller insurers because they have to offer you bigger and better returns on your money, which means that they have to rob Peter to pay Paul in order to do it. It's not a good business principle. So momentum, I don't deal with momentum a lot. But everything I have done with momentum over the years has been pretty good. The retirement annuities I did for clients, the returns were pretty decent. The life cover I've done for clients, never been a problem. So my thoughts on momentum is they're pretty good. I'm definitely not going to trash them. Sparkle and Go, what apps can I use to start investing? That's a very good question. I don't know. Sparkle and Go, what apps can I use to start investing? I don't know, because I don't make use of apps. Remember, in my world, I'm a financial advisor that consults with people, and I take a lot of your information. I find out what you want to do, what your goals are, what your dreams are, and then I go and work out a plan for you. And yes, I've got some quote systems, I've got some analysis systems, and according to those things, I go and work out the figures. But I don't use apps for investing. If anybody wants to invest anything, if anybody accepts my advice and does an investment, I either do it with them on a paper base, or I do it with them on an online investment directly with the insurance company or the investment company. I know that there's one or two apps out there that you can actually go. You can go and Google it, where you can do your own financial needs analysis, where you can do your own planning. But at the end of the day, when taking up the policy or the investment, I honestly don't know which companies you can do it like that. I believe that you're going to have to most probably do it through an advisor. Let's see where we are now. Leletu. I'm 24. I want to have 2 million in a year. I'm currently a new medical doctor. Hey, Leletu, hang on a second. Let's just do that quick calculation here. You want to have 2 million in a year. Let's just see what the sum says. 1 to 3. Divided by 12. Easy. You only have to save 166,000 Rand a month, and then you will have 2 million in a year. So I know what new doctors earn. You might have to start moonlighting in order to make more money so you can save 166,000 Rand a month. But I like your enthusiasm. My pension fund is Momentum, Momentum. Oh, when I'm pension, I'm thinking of staying there. Oh, Philip, so you say yours is with Momentum Metropolitan. That means that you were with Metropolitan, and then when Momentum took them over, it became Momentum Metropolitan. When I'm pension, I'm thinking of staying there. So here's the thing, Philip. This is why answer going to be to you. When you get to pension, in that last 3 to 6 months before you go into retirement, that's when you have to start planning with your financial advisor. That's when you have to sit down and start looking at what your needs are going to be. Then you're going to do the tax calculations on the 1/3, 2/3 option. Then you're going to start looking at the living annuity versus the life annuity, the guarantees versus the market exposed living annuity. And at that point, once you've decided, okay, this is the first thing. Once you've decided what product you're going to take, then only do you decide on which company you're going to go with. Because if you're going to go with a guaranteed life annuity, then you would want to go with the company that's got the best guaranteed annuity rate at that specific time. So let's say you get to that point, you want to stick with Momentum, but based on the annuity rates, they are number 11. And number 1 in the queue is Alan Gray, for argument's sake. It would be not to your benefit, obviously, to stay with Momentum just because you like Momentum. Okay, so that's the first thing. You will check the guaranteed rates if you're going to make use of the guaranteed rate. The second thing is you're going to have to look at the portfolios. If you're going to go into a living annuity, does the Momentum portfolios offer you what you expect in returns? And if they do, absolutely, then you stick with them. There is no need for you to move to another company if you don't want to, especially if you enjoy the company that you're with. But like I say, I will be open-minded if I were you, and I will only make that decision once I get to actual retirement and once we've done the planning. Oh, here we go again. Is Aluma Capital genuine with their returns? Yes. I actually sat down with Aluma Capital the other day and I looked at their fund fact sheets and I looked at their returns, and what they showed on their fund fact sheets is indeed true. So they are giving that at the moment. Will I necessarily invest my money there? I'm not 100% sure because it's venture capital, it's high risk. It's higher risk than what I'm willing to take. And yeah, that's all I'm going to say about that. Philip, I think I gave you my thoughts. Facts. Whoopsie, there we go again. This thing pops up every now and again, then I don't know what to do with it. There we go. Okay, let's see who's next year. Yandani, facts. Thank you very much. How big are you on high risk investments? Oh, I'm so glad you asked this question because I'm big on high risk investments. But one has to determine how big is a high risk investment. Let me just see. I thought I had something else that I could use here, but I can't. Let's use this. I know this is most probably the most stupid example you're going to see. If you take this remote control and you say, yeah, where the red button is, that is guarantees, and here is high risk. Okay? So you start off with guarantees, then you've got low risk, then you've got medium risk, then you've got medium to high risk, then you've got high risk. All of these that I've basically mentioned to you now is the investments that I like to deal with the different insurance companies. Then you get higher risk. That's where we start talking about the venture capital. Okay. Then you get even higher risk. That's when you start doing the I'm going to start my own company. Okay. And then you go even higher risk. And that is where people gamble or they invest in Ponzi schemes or pyramid schemes. Okay. So I like to go to about here, which is about 3/4 to the very high risk side. And here is where you've got equity funds, where you've got portfolios that is all shares and stuff like that. That I like because you are invested completely 100% in shares, but you've got a variety of shares, so you diversify. So as much as it's high risk, the risk in your fund has already been diversified. The moment you go past that and you start going into the venture capital and buying and selling property, own business, Ponzi scheme, stuff like that, then you're really going into the high risk stuff. And that's where I do not like to play. And if I sit down and I have a consult with you or anybody else for that matter, I'll explain to you what the risk is according to me and why I just go to certain points. Okay, what do we have next? Moonlight is God's gift to souls. Okay, I'm not sure what you mean by that, but I'll accept it. Would you possibly know what the best investment account in South Africa? Bank investment? No, W. Unfortunately, I won't because I don't deal with bank products. As a matter of fact, I keep on telling people not to invest in bank products. A bank and a savings account that you have with the bank, according to me, that's all banks are good for, is to have a savings account which you use as an emergency fund. Except for that, you should be investing in different places than a bank. Let's see who else we've got. Oopsie. Hey, ladies and gents, seems like for a change tonight, I might just finish at 7 o'clock. Can you believe it? Cook Verzazi, what do you think of capital legacy for estate planning generally? So I'm going to be very honest with you, and capital legacy will hate me for saying this, but I was a very, very big fan of capital legacy until COVID. And then after COVID, there were so many changes that capital legacy made. They suddenly decided not to handle certain estates of certain values. There's specific T's and C's with regards to the policies they sell. But if you don't have your will with them anymore, then the policy doesn't necessarily pay out anymore. So I'm very disappointed in capital legacy and what I've learned from them post-COVID. So personally, I don't like to use them anymore. The other thing is with regards to that, they are good in the setting up of wills. They're good in the handling of estates. But that's not estate planning. Estate planning is not drafting a will for somebody or handling an estate for somebody. Estate planning is calculating what your needs are if you pass away, what your needs for your family is in the event that you pass away, what happens to your capital after retirement, for example, to make sure that it's tax efficient, etc., etc. So I think that's where one has to distinct this. The company capital legacy is good when it comes to drafting wills, handling estates. Okay. Hi, Christian. Good evening, sir. And yes, it is well with me. Thank you. Good evening, Nigel Gilbert. Okay, I'm going to get to that in a second. Just give me a second. Yeah, okay. So, DIPH, how much is your consultation fee and where are you based? The IPH, my consultation fee is 1,000 Rand for the first consultation. Any further consultation fees, commissions, fees, anything else, I negotiate with the client in that meeting going forward, because sometimes people just come for one consultation, they hear what they want to hear, and then it's over and done. Other times they want to walk it, they want to take the journey with me into the future, and then we decide from there what will be the further costs and fees. Where I'm based, I'm in Krugersdorp in Gauteng, and this is where I consult from. Thank you for your advice. See, you surely have a passion in your work. I do, Philip. And you know what's the most amazing thing, Philip? I started my financial advice journey out of desperation many years ago. And desperation because I was told by the company I worked for that I can forget any promotion for at least 20 years. And then I decided, well, I don't want to be stuck with only mediocre increases. And I started my business. And today I say, thank God I did, because I really enjoy what I do. Do you do VC and private equity plays in SA? So once again, I'm not sure what VC is. And if you're talking about private equity, yes, I've got a couple of private equity funds that I do recommend to people, although I don't do it personally because we do it on a referral basis. So I tell people the facts about it. And then if they want to chance some money, I tell them what I believe they can based on their risk profile, how much they can put into that. And then I'll refer them to these companies. So in terms of private equity, yes, there is a couple of funds that I do think are pretty good and that I have trust and believe in. VC, unfortunately, I can't tell you what that is. There's so many acronyms in our industry, and now it seems like I'm just getting to learn more acronyms. Okay, here we go now. Sorry, folks, just seeing who's next in line here. I don't want to miss anybody. Tamsin Clausen, do you do offshore investment? Yes, Tamsin, I do. And these days we are doing it more and more often because of the benefits, because of the diversification, because of the tax benefits. It's really great investments to do and to have in your portfolio if you have a need and a capacity for it. So yes, we do offshore investments. As a matter of fact, I have on board, I've got an international investment specialist, and I've got a private client specialist that I go to, and that we actually sit together when I've got clients that want to do offshore investments or has large amounts of capital to invest. And we do the planning together, and then we present on that. And that also I feel is good. It's not only my word, it's not only my opinion, but you've got 3 investment brains that work together to give you good advice. Oh, venture capital. Sorry, private life. Well, venture capital, the fact of the matter is that a lot of the private equity funds that you get makes use of venture capital and does venture capital. And it once again comes down to who you listen to. Some people can sell you venture capital as the best thing since sliced bread and as safe as can be and whatever the case might be. But there's always risk attached. There is nothing like a guaranteed investment. There is nothing like a completely safe investment. Everything has risk. And when it comes to venture capital, trust me, there is more risk involved. But that's the thing. It's like starting a business. The biggest risk you can take in your life is to start your own business. But it's also got the biggest possible returns. Now, with venture capital, it's the same thing. The bigger the risk, the bigger the return. But you must be willing to take the punishment if it comes. What's your thoughts on South African stocks? I like South African stocks. What I like more is the fact that these days we can have South African stocks and global stocks. We can mix and match. And it all works together in this unique economy that we have to create wonderful investments for clients. We do not have a big stock market. I mean, there's like 360 companies on the JSE, but there's brilliant companies on there with good value. So absolutely, yeah. Up until a few years ago, that was the only stuff that I sold because it was doing better than international stocks. What minimum can one out of on offshore? Oh, on offshore, 1 million. Well, the thing is with offshore investments, okay, you get direct offshore investments, and then you get what they call asset swaps. So an asset swap is where you invest your money in an investment locally. They take the money, they put it over internationally, so it actually is invested offshore. And then when you withdraw the money, you have to withdraw it here. That's an asset swap. So on that, you can start as little as 50,000 Rand. But if you do a direct international investment where you physically take the money out of South Africa and you physically invest it offshore, then it's going to differ from company to company. But normally you look there at a minimum starting of R1 million. The one that God loves, how to contact you. Oh, I love your name. Just like John in the Bible, the one that God loves. How to contact you, you just go into the profile. My WhatsApp number is there. You can contact me on that WhatsApp number. Or you can email me. We've got an email address on our website. It is talktous@heptagonc.com. You're welcome to do one of those two. Once we've set up an appointment and I'm going to see you, whatever, then I'll share my personal number with you, okay? But until then, go to the website, do the email or the WhatsApp number. Otherwise, I will drown in all the calls that I get. Tasman, waiting for inheritance and then I want to come see you. Tasman, Tamsin, that is a very good idea. While you wait for your inheritance, okay? Because I'm sure that now that you know there's an inheritance coming, you also have a good idea of what it is. Do yourself a favor, before that money even hits your bank account, come and talk to me already. Because once it hits your bank account, it is an itch that you battle to scratch. But if you start planning now and you start getting yourself already mentally prepared for the money that you're going to inherit, it's so much easier that when it hits your bank account, not to start spending like a lunatic. So yeah, knowing that it's coming, that's it. What's for supper, says Philip. Did you see my wife? She made melkos tonight. Can you believe it? I'm very upset with her. I said to her, you make melkos and I'm going to do this TikTok live, so I'm not going to be able to eat until 7. I'm going to have to reheat it. Folks, I see it's past 7 again, so I'm going to do the last few very quickly. What should I keep in mind if I want to buy some US shares and on easy equity, tax-wise? Mike, what should I keep in mind if I want to buy some US shares on easy equity, tax-wise? Mike, so tax-wise, it's basically capital gains tax. If you're going to buy the shares, there's always dividends tax. Now, I don't know enough about the easy equity platform, but I take it because it shares that there will be dividend tax, and I don't know how they handle that. So that's the one that comes to mind. And then the second one is capital gains tax. Whatever shares you buy, if the capital gain that you earn is more than 40,000 Rand, then you're going to start paying capital gains tax. And that's basically the only thing that you have to keep in mind. Okay, who else? Please advise on the Luma Capital. The returns seem to be good, to be true. I just mentioned the Luma Nana. They are alternative investment company. Their fund fact sheets is true. The returns that they show is what they're giving to people. Whether they will keep on giving that, I don't know. Because I don't know if they can keep it up. They seem to think that they can. I'm not so convinced, because I reckon if they can do it, then everybody can do it. And if everybody can do it, why is everybody not doing it? But in terms of Aluma Capital, I do believe that the risk that's involved with investments such as theirs is bigger than what it's going to be with a normal portfolio with an investment company. And therefore, the returns that they're getting at the moment is also higher because they are taking the higher risk. So once again, if you are going to invest with a company like that, just understand the risk. And number one, number two, decide for yourself whether you can and how much you're willing to lose in the event that things do go a bit pear-shaped. Thank you very much, folks. That seems to be that. So true planning ahead helps. Yes, it does indeed. Absolutely. Markets are back on track. Yes, boys. Mara Fontaine, wanneer hoor ek van jou vir daai koffie? And thank you, Busisiwe, for always watching my video. Thank you, everybody. It's been fun, as always. And now I am going to have supper. You must all have a spectacular evening and a great week. Enjoy the holiday next week. Segan's going to be holiday most of the week. Thank you, Jay Moore. Keep well.